Welcome back to part 2 of my guide on how to invest in gold, given the upcoming recession, to protect your money from inflation and a potential dump in the stock market if the Fed pivots too late on rates. In part 1, I shared a side-by-side comparison of the top 8 different ways to invest in gold, as we saw here. The top 8 different investment products which give you exposure to the gold price. And now in part 2, I'm going to give a detailed walkthrough showing step by step how to actually invest in these products, taking the top 3 choices, which were exchange traded funds, contracts for difference, and gold crypto tokens. If that sounds interesting to you, then let's dig in.
Like I'm on my tiptoes, baby. You think a little too small. I got big goals, baby. Ain't where the money at. Look, I just need the info. Pronto, I go and get it and split it with my kinfolk daily. And I'm the type of So before I share the top 3 investment products, I just want to give a quick shout out to the guys over at MDX Algo, whose powerful software helped me to identify this golden opportunity, so to speak. To show you what I mean, if we jump onto the gold price charts on the daily and I turn the algo on, you can see here that when we had that bounce in November off that $1,600 level, the algo was signaling that was a good time to go long, and it was also showing down here in the oscillators showing this bullish divergence. And actually, I just want to play you a quick clip from Max, who runs MDX, who called this out back then.
I have actually bought some gold, guys. I do think this trade is going to make me $1 million. Look at this right here, guys. We're actually holding support on EMAs. It wouldn't surprise me to have one more little go down. And then I do think in January, between now, basically the 1st of December and mid-January, I think this is what we're going to get on gold. So I do think it's a very, very nice trade setup here, guys. I think you could do well if you get into these positions.
So, interesting stuff on that gold price right now. If you'd like to give that MDX Algo a try, check out my link down below in the description, and you can get a 7-day free trial and 15% off if you go ahead. Now, let's jump in to the top 3 and see the best way you can get exposure to that gold price. So next on the list, we have exchange traded funds or mutual funds. To invest in gold via an ETF, we need to use a brokerage or investment platform. And there are a lot to choose from. So I found this helpful article which compares all the best platforms, looking at the pros and cons. And if we skip to this comparison table, you may recognize some of the names here, like Hargreaves Lansdown, Fidelity, Interactive Investor. Although one I like to use is called InvestEngine, particularly since, as it says here, there are no platform or dealing fees, and generally costs are very low. So if we go to the InvestEngine website, you can see here they offer a choice of over 500 ETFs. You can do a DIY portfolio or a managed portfolio. And if you'd like to know how to set up an InvestEngine account from start to finish, check out my video popping up above, and I've done a walkthrough of that. So go away and watch that and then come back to this section. Now, assuming you've got your account ready to go, I'm going to log in, and this is my dashboard view here. So you can see that's the ISA that I already have set up with some stocks in that particular account. But if we want to set up a gold ETF, let's set up a new portfolio. So click Add New Portfolio. I'm going to do DIY, and this time I'm going to do a general account instead of an ISA account. And then here it shows you the list of all 500 ETFs. So let's search for gold. The 2 that we're interested in to track the gold spot price are this iShares Physical Gold or Invesco Physical Gold. So let's go for the iShares. This page provides you a detailed summary of exactly what the ETF does, and it says that the exchange traded commodity tracks the gold spot price in US dollars and does not provide an income or yield. And then if you click on this key investor information, you can download a PDF. So here's the PDF I downloaded earlier, and it's important to read this small print. So it says here again, yeah, it provides exposure to the gold price, and that is calculated based on this metal entitlement calculation. It's denominated in dollars. And further down, it gives you a breakdown of the likely return. So here it's showing in different favorable or unfavorable circumstances, expected returns, and also tells you the costs. So transaction fees, 0.16%, and so on. So I strongly encourage you to read that. But the basic idea here is when you put money into the ETF, it's going to track the gold price, which is reflected in this chart here, which has shown the performance of that ETF. Although you will notice the current price here is £28.51. That's not the same as the gold spot price, which I think is around $1,800 at the moment, because you're buying, if you like, notes of the ETF itself. But it still does give you exposure to the gold price, because the value of this is obviously directly linked to that underlying gold spot price in the open market. Right, so if we want to go ahead, we just add this to our portfolio and now click continue. And there you can see I've only got one item in this portfolio, that gold ETF. So 100% allocation, review and continue. There's no equities, that's not relevant. And that's it, we're ready to start investing. So now if we clicked invest, we could deposit, let's say, £1,000, and obviously that would go directly into that portfolio and you would be invested in gold. And that's all there is to it, really. It's very, very simple. This is a great platform if you'd like to take that longer term approach and do this via an ETF. Next, I have contracts for difference. So the advantage of using contracts for difference over the ETFs is that it allows us to gain direct exposure to the open market gold spot price. And if we go and look at the charts, you'll recall that in November, gold had a bounce off that $1,600 level and has since moved up to around 1,780. And actually, since making part one of this video, the gold price has had a further move up from there to around $1,810. Now, to explain how we could have taken advantage of that increase with the CFDs, I first want to share a quick example to show how they work. If you look at this spreadsheet I made, this shows, first of all, an example of just buying the gold spot price. And I'm using a account size here of $1,000 I might have to invest. So the gold price was at 1,780. It's increased to 1,810. So that is a percentage increase of just under 2%. So based on our $1,000 investment account, that would increase the account value to $1,016, which would be a profit of $16.85. Not bad, but obviously we're not making that much because the amount we put in is not that large. Now, moving on to CFDs, this works slightly different. So obviously the gold price has had the same move here, but instead of looking at the percentage change, we think about the points change, the absolute change. So in this case, it's gone up by 30 points. Now, the contracts for difference give you a so-called sensitivity per point move. So in the case of gold, it is £1 for each point it goes up. So let's say we had a position size on our CFD of just £1, then that means you have to multiply the sensitivity by the position size and then by the amount the price moves. So in this case, you can see the formula here. 30 points move up times £1 per point sensitivity times our position size is a total profit of $30. Well, if we increase the position size slightly, let's say we had £10 per point, then our profit from that same move is $300. Well, obviously, this is a lot more than the $16 in the spot example, because contracts for difference allow us to use that leverage, even with a relatively small account size, to make much greater profit or indeed loss. Let's show a live example to see how this works. So I'm going to be using the IG index platform. This is their homepage. And here, this is my account where you can actually deposit funds to trade on here. And it says the minimum deposit amount is £250. So assuming you would then put that money in ready to invest, you come to this dashboard page where it has the different products you can use, such as spread bets, share dealing, or CFDs. So let's open the CFD platform. Takes you to your workspace. We want commodities and we want gold. And if we zoom out slightly, here's the gold price, which we saw before. And in this top right-hand corner, this is the deal entry section. And you can see there's the price, 1808. And here's the buy and the sell, 1807, 1808. And then under that, it says position size. And you'll see here, it says one contract equals £1 per point. So let's imagine that we did a hypothetical trade and we put in £10 per point. So if I placed the deal there, we would then enter the trade at 1,807. And let's say that moved up another 30 points to 1,837. Well, using our spreadsheet, 1,807 moves up to 1,837. Position size was 10. Sensitivity per point was £1. It's moved up 30 points again. There's your P&L, $300. So this works in exactly that way. That's as simply as I can explain it, really. Another platform that you can do this on that's also quite good is eTorro, which they all work in the same way, essentially. Here's eTorro, and here's the gold price. Just let it load. And if I click invest, here's the deal entry screen. It looks very similar. You can enter your amount there that you want to trade. The nice thing about this, though, is you can control the amount of leverage more easily because it has these buttons down the bottom. So this is a very simple to use one. Although personally, I prefer IG. It's more sophisticated and has more advanced tools. So that's it in terms of contracts for difference. So I hope that helps explain how this works and how you can gain that direct exposure. So in part 2, we've covered when to invest in gold using the MDX signal indicators, how to invest in gold for the longer term using those ETFs, or how to trade in gold in the shorter term using the contracts for difference. Now, if you'd like to hear more, hit that subscribe button and notification bell down there. And look out for the final part 3 of this series, where I'm going to do a deep dive into the crypto token Paxos Gold, which is possibly an even better way of doing this. In the meantime, I hope you've enjoyed this detailed walkthrough. Thanks for watching and have a great day. Cheers.
I ain't surprised at all. Seen them rise and fall. Went up the mountain, it wasn't hard to climb at all. At the top, I found some relief. I finally got some peace. Carry on, but please don't mess up the moon. Yeah, I worked too hard for it. No, I need to beat it before you mess up the moon. Yeah, ooh, I worked too hard for it, and I need it, so please don't mess up the moon. Don't mess up the mood. Don't mess up. die for it.